Ladies and gentlemen, welcome back to the channel. AMC stock is up over 2% today, and really just continuing on this bounce that we have seen recently. Now, tomorrow is going to be a major catalyst for AMC. You and I know it. It's GME earnings. Now, what you're actually seeing today with AMC is very encouraging, and that's what I want to talk about here in this video. Citi also has a warning for investors that I think that you should hear. Does it change, the catalyst for tomorrow? Does it really affect too much? I don't think so, but it's something that could make things more bullish for AMC, especially if collateral does start to get squeezed more than it has recently. So let's get into all of this information. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. So AMC stock is up 2.27%. It's very volatile. It's up and it's down, but you are in the green today, and you're basically carrying on this bounce that you've seen back here on May 31st. You low wicked on this candle. You wicked all the way down to $4.37, and now you're back up to $4.73 per share. Now, GME earnings are going to be massively important for the markets, or for our markets in AMC as well as GME. GME today, if we go ahead and take a look, GME is up another 3% today, really just carrying on this rally that we have seen. It's been kind of a slow and steady upward move. This does suggest to me that you're probably going to get a pretty good earnings report from GME. Now, it'll depend on guidance, it'll depend on profitability or not, whether the stock goes up or down, but it looks encouraging from what we're seeing right here, especially after yesterday's candle on GME. Look at the wick on that. You exhausted the buyers to the upside. Stock came down from the highs, but yet you're recovering to the midpoint of yesterday's trading. This is a positive formation as long as we hold this into the end of the day today. Now, I think AMC has more negative priced into it than positive, and I think upon a positive catalyst such as GME earnings, that could really send AMC stock up dramatically higher. Now, let's kind of get into some of the ortex data here. So the live short interest of free float is now at 21.87%, higher than where it has been over the last week or so. The amount of shares currently sold short sits at about 113 million. Cost to borrow average 74.7%. Cost to borrow max 135%. Cost to borrow minimum 50.13%. So you're seeing some pretty healthy numbers here with the cost to borrow fees. And I mean, the higher the better, obviously. And you did hit a low point as of not too long ago where the cost to borrow max was under 100. It was like 60 or 70. Well, you've doubled from there. Cost to borrow fees from interactive brokers, you got about 65% still, with about 100,000 shares that are currently available to be lent out. Now, AMC stock would be a lot higher right now if it was not for the options that you're seeing. They're just trying to suppress the stock, guys. That's what it is. A July 21st $10 put that just came in for 1.21 million. July 21st $10 put for 600,000. In August 18th, $10 put for 670,000. And you're basically seeing this across the option chain here today. But what this does is force market makers to short the stock. It forces market makers to go out and short shares of AMC. Now, I've talked about this before, and I don't want to get too repetitive on you guys, but it's indiscriminate shorting from market makers. Whether market makers want to short the stock or not, when these option orders come through, they have to. They have literally no choice. But vice versa, when AMC stock rallies, they also have no choice but to buy back those shares that have been sold short. So I think with all of this negative news already priced into AMC, AMC is not expecting anything positive based off of what you're seeing from the share price. That is where the opportunity is, and that is where I am going to be position for that upside move. And that's the only thing that makes any kind of sense right now. If you're shorting AMC right now, you're crazy. Okay, if you're buying puts on AMC, you're crazy, in my personal opinion. That would not be a profitable move, in my opinion. Now, if we look at the overview from Ortex, you got a short score of 92, which continues to be elevated and continues to go higher. Now, short interest value amount is $520 million. Estimated short interest of free float at 21.75%. Free float out on loan at 35.79%. Shares out on loan 184.81 million. Days to cover 7.71. Cost to borrow 60.44%. And also 100% share utilization. So you're looking pretty dang squeezy as far as AMC is concerned, especially when you look at the days to cover being at 7.71. This is up 45% in the last 3 months and likely to continue to trend higher as volume has been lower with AMC stock. Now, AMC today, you really haven't seen all too much for news. It's really been a pretty dry one, besides Intera Capital selling another 2 million in ape stock. You could see this right here. They now hold $232 million, kind of showing they're just selling shares. There's not really any conviction there with this court case. There's no conviction with this arbitrage trade. The more they sell, the better it looks for me and you, expecting an upside move in AMC stock. Now, on a broad market basis, you are getting more kind of crypto FUD, I guess, if you want to call it. The SEC sues Coinbase over exchange and staking program. The stock dropped 16%. Same thing with crypto dropping as well today. This does put incremental pressure on shorts that do have exposure to crypto. As you know, about 70% of hedge funds do have exposure to crypto, and the total amount of that is unknown. But last we knew, at the end of 2022, it was around $70 billion. Now, obviously, the price of crypto has went up in 2023, so it's likely a lot more than that now. And that is where you do get the incremental pressure being put on hedge funds and institutions. So that's probably the biggest bit of news coming out today on a broad market basis. Now, Citibank is coming out with their own warning. They said, here's the red flag that says tech stock sell-off could arrive soon. Now, if we go ahead and look at exactly what they said. So they said, quote, positioning is the most extreme in NASDAQ futures where investors are already sitting on very extended profits. This could lead to rounds of profit taking in the near term, Montego told clients in a note on Monday. As he explains, investors extended net long positions or bets that prices will rise in both S&P and NASDAQ futures in the later half of May. This bullishness was driven by large cap growth and caused the NASDAQ to become more extended than the S&P, they said. Pushing into June, the strategists point out that investors have now moderated those net long S&P positions and continue adding longs to NASDAQ futures. So they're a little bit of profit taking, right? A little bit of shorts on the S&P, but the NASDAQ, you're not seeing any shorts. You're not seeing any coverings. You're just seeing new long positions. And they say, quote, not only is NASDAQ positioning the most extended ever seen by the model going back more than 12 years, but profit on these long positions averaged 7.6%, which is a level where the profitability of rounds of profit taking increases significantly. The average profit for S&P long positions is small by comparison at just 2.7%. So what they're basically saying is you have so many profits out there and so many people are net exposed to an upside move in the NASDAQ that you just can't stay at these levels for all too long. And that is would be a positive thing for AMC, for squeezing shorts out of short positions. That's exactly what you would want to see, is the markets actually coming down. That would put a lot of upside pressure on those hedge funds to actually cover on those positions, guys. So I think that's important to point out. could start at any time. We have no freaking idea when that would happen or what kind of catalyst that would be to cause that. But I mean, in regards to GME earnings tomorrow, that's going to be the biggest thing for AMC stock. Now, we do have some room to move up here. You're up about 3%. It wouldn't surprise me if today is over a 5% day. You really need to get back to about $5 per share. That's the 50-day moving average. That's the next level of resistance that you will see. After that, you're going to be targeting the 100-day moving average at $5.29 per share. Ladies and gentlemen, that is going to do it here for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.